Recently, I've decided to add two interesting Canadian dividend stocks that are currently in discount to my own stock portfolio. And in today's video, I'll share with you what are my two picks and why did I purchase them. So without further ado, let's take a look at my pick number one. The first company that I've decided to buy recently is the Toronto Dominion Bank with the ticker TD. With no surprise, if you've already seen my different videos in the past about the best Canadian dividend stocks to buy right now, you'll find that the Toronto Dominion Bank comes pretty often, and it is also one of my biggest holdings in my own stock portfolio at the moment. However, recently with the news of the potential acquisition of the First Horizon Bank, many investors saw this news with a bad eye. Obviously, this is due to the fact that at the beginning when the transaction was originally proposed by TD, it was before the financial crisis that we've seen with the bankruptcy of the SVB Bank. It obviously means that at that time when the transaction was initially proposed, the First Horizon Bank was worth a lot more money. But since that time with the crash, it obviously means that it has lost quite a lot of money, and it's why a few weeks ago, knowing the fact that the deadline was fixed on the 27th May of 2023, TD has decided to turn down this initial $13 billion transaction. But you can understand that it wasn't the outcome that the First Horizon shareholders were expecting, and so to terminate this potential proposition, TD will have in the next couple of months to pay a $200 million break free to First Horizon. As a TD shareholder, I was pretty excited about this news that they were refusing this potential offer because I don't think that TD needed to make that transaction at the first place, and most importantly, they didn't needed to pay that much money for a company that wasn't worth it. And so with these recent news, I've decided to add a few shares of TD in my own stock portfolio, where I am also subscribed to the DRIP program. It means that every single dividend distribution from TD, I will automatically reinvest those dividends that I will receive in the form of cash to reinvest it to buy new shares. In any ways, at the end of the day, even if we've seen a lot of negative news about this company recently, well, the Toronto Dominion Bank has still been able to serve Canadians for over 100 years with some really essential services. And an interesting fact about TD is that despite all the war, the financial crisis, and the recessions, we can see that since its creation, it has still been able to pay those dividends to their shareholders every single year. And in the future, I can't really see the situation change because Canadians will still have massive needs for credit cards, savings account, insurance, and loans. These services and products are quite essential, and with the project immigration for the next 3 years where we can expect to see 400,000 new Canadians every single year, well, obviously the great beneficiaries of these people that will come in our country will obviously be the big five banks. Indeed, the more people that will come in the country, the more people will also need their financial services. And in that field, TD is quite well positioned, where it is currently the second largest bank in Canada and in the top 20 of the largest banks in the world with a market cap of over $100 billion. Plus, at the moment, TD is currently trading with a price to earnings ratio of about 10, which is showing that this company would currently be undervalued on that side. So for those reasons, combined with the fact that TD currently has over 27 million customers all around the world with an excellent dividend yield of about 5%, I have decided to add a bunch of new shares in my portfolio. And so the second stock that I've decided to add to my stock portfolio recently is the restaurant brand A&W with the ticker AWUN. This business is well known by many Canadians that love eating out because it is one of the 5 largest fast food chains here in Canada. Indeed, there are currently over 1,000 different A&W locations in Canada in more than 500 cities in 12 different provinces. And with no surprise, the most represented province is Ontario with about 310 locations of A&W, which represent about 30% of their total locations. And as you can notice, when we're talking about only Canadian fast food, we can see that it comes at the second place just after Tim Hortons. So their big success obviously comes a lot from the food that they are proposing, notably their famous burgers such as the Mama Burger, the Teen Burger, and the Grandpa Burger, add with their famous root beer and their onion rings. But one thing that is crucial as a great fast food chain is also the quality of the breakfast that they are offering, which are, in my opinion, the best breakfast that you can find in Canada. Plus, A&W has always been an innovator when it comes to adding new items to its menu. It notably recently started to offer different cut burgers and Beyond Meat nuggets, and it also recently rolled out its brew bar, where it will offer frozen beverages as well as hot and cold espresso beverage. And one thing that A&W is pretty good for as well is to test out different ideas before to make them national. For example, over the last 2 years, the brew bar was actually available in different cities in the country such as Victoria, Ottawa, and Montreal. But after the big success that it has seen in those towns, they have decided to introduce it nationally. Add to this, A&W has recently increased their commitment to its sustainability, where they notably want to increase the total use of renewable energy, and they also want to decrease the total waste of food. Plus, they've also made a lot of great advertisements on the quality of the food that they are proposing, notably with the beef that doesn't have any artificial hormones or steroids in it. And this has the impact to make this company greener and healthier compared to its fast food competitors. But at the same time, it makes that their food will be more expensive compared to their fast food competitors such as Burger King and McDonald's. For example, A&W will be charging for a simple cheeseburger between $4 and $5. And when you compare it with McDonald's, you can pretty much obtain 2 cheeseburgers for that price. But as an investor, it is still a great company to invest in, knowing that it has a massive part of the Canadian fast food market. And by investing in this business, you are investing in a company that has been growing a lot over the last 2 decades. For example, in the first quarter of 2020, after the shutdown of about 230 restaurants, the total sales have fallen of about 14%. But after that, their total sales the next year have been growing of over 14%.
Nice.
And over the last 12 months, you can see that their profit margin and their operating margin have been booming. Plus, as being an experienced franchise-based business where over 70% of the new restaurants were on the franchise side, the company's royalties that you will receive as an investor of this business is about 3% of the total sales of the franchisee, with also an advertising fees of about 5% of the total net sales. On your part, this translates to an excellent monthly dividend of about 5% per year. So A&W won't only make the food fanatics happy, but also the dividend income investors too. And despite having a quite small market cap of about $500 million, it still has an excellent price to earnings ratio of about 18 at the moment. And for the income investors looking for more stability in their portfolio, well, they'll be able to find it with a beta of about 1.08. So there you have it. Those are 2 great Canadian dividend stocks that I have recently invested in because of the high potential that they have, but also because of the high dividends that they are giving to their shareholders. But on your side, if you're looking for the best dividend ETFs to invest in right now, well, check out the video that's going to be right over here, and I will see you soon. Peace!